you've navigated moves from Israel to the US and pivoted across coffee shops, tech, and real estate. So gaining a unique cross-industry perspective, and that's what Change and Triumph is all about. So welcome, Alon, to Change and Triumph. I really appreciate you coming on. So I have a question.
Yes.
Looking back, how did shedding the idea of following someone else's blueprint revolutionize your approach to real estate and business innovation?
So you mean how I followed someone else and kind of made it my own in a way?
Absolutely.
Correctly. So I always knew that I wanted to do real estate, right? Back then, when I was very young, real estate was just like one dimension. It was one thing, real estate. You didn't have all the different fields within the real estate subject. So I didn't know exactly what I want to do. I just knew real estate. It took me some time to get into the real estate. I thought I'm going to do it probably in an earlier stage. And basically, I always knew that, if you want to do something proper, you want to join people who already know what they're doing. You don't want to invent the wheel. You don't want to think like you know it all and then just do all the wrong stuff, basically. So I guess like the universe, you have an idea, you know what you want to do, but then the different people you meet throughout that path is kind of like leading you to where you are today. You don't really know in advance where you're gonna land. You just need to be open-minded and kind of see who you connect more with and who you feel more comfortable with. And that kind of like what brought me in a way to where I'm today. I'm always open-minded to different things. I never say no. I always eager to learn and explore. And basically the real estate thing I did was to manage buildings, basically. And that was just through a guy that I knew for a couple of years and just from hanging out in a way. And then he started his real estate journey. He was already like a multimillionaire through his family. So he had the money to buy all the buildings, but he needed someone to manage. I didn't have any experience with management or stuff like that, but I kind of jumped into the water and started managing. But that just from knowing him. If I didn't know him, I would probably be, somewhere else in real estate. And that's kind of like how I started. You mentioned the coffee shops and stuff. That was also just life led me to it. I didn't really look for it. I just had an opportunity and I jumped on it. And I got back to real estate after the coffee shops. I got back to someone that I knew back from Israel. That we're still doing some stuff together. He's still investing with me in the hotels right now. And we're very good friends. And that also something that kind of like, had an opportunity. He had a spot that, we were there that it fit to combine forces. And basically that how I got to him. Then I got into, you mentioned the tech. It's like everything is like, it just
one thing led to another.
Pretty much. It just people, and every person have a few routes, right? Like you have probably 10 options, to do different things, and you're hoping to choose the best route, basically. So I can say that I'm sure I made many mistakes along the way, but I feel complete with them. Like I don't have regrets, and I'm always trying to do the best decision. And if you're trying to make the best decision and you're really exploring it the right way and you're making a mistake, so be it. I mean, there's nothing you can do about it, but learn from it,
That's phenomenal. What a phenomenal story. And it brings me to my next question, which is how did that diverse market background inspire your pivot into mentoring future fund managers? And what unexpected lessons have you learned from that journey?
Wow. There are a lot of lessons, that along the way, there are a lot of lessons. I think that the main lesson will be to do your homework. And, I've done many different like subject within like real estate, and I'm always doing the homework before, so it can be a whole new subject. So again, if we're getting into, for example, hotel industry,
Yeah.
the there are so many different, it's a whole different animal, compared to, for example, vacation rental, single family market in the United States. It's a whole different animal. So again, it's to surround yourself with the best people in the subject that you can have, that they already have the experience, they already know. And when you're on top, you're trying to connect all the dots, between the investors to the people on the ground. And if you can do that, then you'll be successful. And I think that, and I know you know that very well as well, that I think the biggest thing is that when you're trying to do something, because at the end of it, real estate is always about raising capital.
Yes.
That's there's
Always.
nothing you can do about it. That's the business, I mean, if you're doing it well, managing that, so, obviously after that, it's going to be successful, but without capital, there's nothing we can do. And I think the main thing, and that's how I wake up in the morning every day, is that you're going to hear 100 times no until you hear the yes. And, when people start, they know it's going to happen, but they're not really prepared for it. So they're organizing a nice deck, and they have the energy, and they're talking to the first 15 people, and they hear, maybe it's interesting, let me go over it. And then everything is no, 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 no. Then they're like getting so discouraged, and they stop. Or their energy is not like, okay, where can I find the next investor? I think more than anything, that's the main thing, because also when you grow, you see that a lot of the big players, they all make mistakes,
Yeah.
because when you start, you're very nervous that you're going to make mistakes, like, with people's money, or you're going to have the wrong entity, structure, or taxes, or so many variables. So again, it's important to do the homework, but you're still going to have mistakes. Everybody will have mistakes. So I think it's just to understand that it's okay, of course, to minimize them, as the best you can. But I think those two, combinations, and pretty much I think that's the most important thing.
I hear you talking a lot about just go for no and don't worry about making mistakes. I watched yesterday a video that I probably watch about once to twice a year, every year. And I forget about it, and then I remember it. And the video is by A.L. Williams, 19, and he has a speech that probably inspired Nike's "Just Do It" advertisement. The whole video is do it. He goes, just do it and do it and do it until the job gets done.
That's pretty much it. That's it. I know a lot of people who are not educated and did not have the best tools and everything, and they were just not scared to do it. Now,
Right.
again, you still have to be good at what you do, right? If you're not good, I don't
Going to
know.
get good at what you do, unless you get good at accepting those no's, like you said.
Yeah.
Get good at learning why people are saying no.
Yeah, that's true too. That's very important.
And then that's why you fail your way to success, because the no is inevitable. And then there's reasons why, and you learn from those reasons why until you get the thing that the investor wants.
Right. 100%. You know it better than anybody.
I do. I really do. I think that has been the main reason for any of my success has been I'm better at understanding it's not what I want, it's whatever the money wants. So if the money says, look, I want this criteria, this criteria, this criteria, this criteria. I'm going to go and figure out how to provide what the money wants. It's not about how I think the deal should be together. So if I can get the money, if it looks like this, great. I'm going to put it together like that. It's so funny. I just was looking at pref equity, and I'm putting together a preferred equity offer for a property that we are buying in Hialeah, a second property in Hialeah. We closed on Pure Vita Hialeah earlier this year, and now there's a second one. I just hung up from the seller just before this call. And it's so funny, as I'm talking to one of the preferred equity lenders, they said, okay, this is what they want. So I had ChatGPT go and figure out what all the deals that close look like for preferred equity, who closed them, and what type of criteria they wanted. And then I put my offer together for preferred equity lenders in that way, because that's what they closed already. This is what the market will bear. So why would you want to be too high or too low from that? So, and that brings me to my next question. I mean, you scaled from managing 300 value-driven rental units to crafting luxury destination homes with top-tier amenities. So what internal mindset shift allowed you to break free from perceived constraints, which is what we were just talking about, and how did it fuel your move into high-end vacation rentals? And now you're in hospitality. So, I mean, it's like it's your change is constant with the market.
Right.
What broke you free from that, your perceived constraints?
So the last word you just used, the last sentence you just used, basically to do the adjustments, you have to adapt to the market. I manage a lot of properties for people who are looking at just long-term investments. And when the real estate market kept going up, the homes did not generate the same cap rates for the investors. And I always try to be ahead of the curve. I'm not a genius, but I'm trying. When I saw that, let's say you're buying 2-3 properties a month for investors and they're happy and everything works. And then after a while, you start buying once a month, then once every 2 months. It means that something is changing. And I don't want to be jobless after, like all of a sudden say like, there's nothing to buy anymore. What am I doing now? So I started looking at the options. Along the way, toward let's say the last year or so, my good friend of mine, he had a software that basically would, you crunch in like an area, what do you want, stuff like that. They pulled all information from the MLS and they telling you what are the homes that fits your criteria. It was a pretty good software. It didn't go anywhere from his perspective. Like it's not like he made a business out of it, but that person then is now my current partner in the brokerage, and he has the software for vacation rental management they're very successful. Actually, this week they're closing $10 million capital raise, and they're doing very well. His story is also funny with how it started with vacation rental. Is that there was a pretty known soccer player that he had a really nice house in North Miami Beach, and then they try to sell the house, and the market start changing. They couldn't sell the house. They're gonna say, well, what are we gonna do in the meantime? They say, oh, there is this platform Airbnb. Let's try to rent the house. The house was doing very well. That pretty much what started everything. And that's why I said, like, life takes you places, so that's kind of like what started. And then from there, he starts seeing the potential, and then we join kind of like forces in that field. And then we started buying regular houses. We didn't get into the luxury homes, amenities, the first couple of years. That was also a shift in the market in the vacation rental segment, because all the houses that we had, we started with buying 3 bedrooms with a pool, and we added a room. So basically it was, 4 bedrooms with a pool. They were
Okay.
doing well. After a while, we said, okay, we'll buy 4 bedrooms, we'll make them 5. That was doing well. And then that started getting very saturated. So we said, what's next? And that's how basically we got into the larger homes, the 5,000 square foot acre lot homes with the amenities. And they were doing exceptionally well because it was new. Nobody else did it back then. People start copying us in the area. Of course, you have more and more of those. And also this slowdown, it's a whole conversation why it slowed down.
Yeah.
But basically that slowed down. And also it comes to me saying, before everything happens, what will I do next?
Yes. Yeah. And I love that you're able to pivot, because everyone that I know that is successful, and this is why we're doing the Change and Triumph podcast, because it's not about picking a thing that you're going to be in for the rest of your life anymore. You have to be able to change and pivot with the market. You've been in real estate, but you pivoted as the market changed, and you paid attention to the market changing. Sometimes it slaps you in the face, but it sounds like you've been ahead of that curveball. And now you leverage data and AI to identify amenity-driven demand in your destination properties as well, right?
Yes.
Awesome. So what bonus AI-driven insight or tactical nugget are you deploying today that most operators overlook?
So we're using the software. When we started, the company was called Design VR. Design VR was from brokerage to renovations to management, everything, interior designer, everything. After a while that we saw that the software is really working well, we separated it. I'm not a part of the ownership in the software itself, but it's a part of the company that we have here. Basically, that management company software is called now Boom Now. Boom Now, it's a pretty known software for the vacation rental market. Every show you will go to around the world, you're going to see a booth of Boom Now. And in relations to vacation rental segment, and we're now in Vegas this week. And the software, it is based on AI. It's giving us a lot of tools to optimize the management. So, for example, let's say, and I'll start with like easy stuff. You have a house that you have a big house. Let's say at any given time, 2-3 cleaners are coming to clean the house. You could use the AI software to see who is the best cleaner, for example.
Okay.
And then you can understand why is the best cleaner, how long exactly it should take to clean a house for, per person, per hour. All the allocation of information basically is, coming into through the software. So you can do a lot of adjustments and improve the workforce basically. Cleaners is one thing, but property managers, because the company has different property managers. So if they're not doing their job right, the software will help you identify why they're not doing their job right. So you can basically make a lot of assumptions based on this. Also from complaints of guests. So you could kind of like see in advance, if you have 1-2 properties, you will know because you manage the property, you will know everything. So you don't really need like a software. It's not really for like the people who have 1 or 2 homes. It's more for people who have 30 plus homes or, buildings. Then basically you can really utilize the information. Of course, the money algorithm, how much to charge per night, but you have a lot of softwares like that. So to combine all the information definitely will help you. On top of it, money management. So the software is every time you go and you see an expense, for example, they fixed an outlet, you're going to see a before after picture, exactly how long it took to fix the outlet, the pictures, the invoices, everything. The investors can see it. So it's making everything very transparent.
So you have your investors log in along with that's phenomenal. That's phenomenal. I'm going to have to look into that. So, because we do before and after pictures for the cleaners as well. However, I did not know a software exists to house all of that information in there. And then how does AI work with the software? Like what's so intelligent?
So AI can do a lot of things. First of all, for the booking itself.
You said just now, because it'll tell you which cleaner was best.
So it makes assumptions, right? It's making assumptions, but besides that, it also can do the booking. If right now you're gonna go to a property and not just book it, you're gonna have some questions, and you're gonna say, I don't know, does the pool has a heater? Is there, is it close to restaurants? Is it like you're gonna make a conversation? The AI will do all the conversation basically.
I'll tell you what, we are still living in ancient times because we still have a virtual assistant for that. So it sounds like VAs are getting wiped out now as well.
We still have VAs. We still have them, but the roles is changing a bit. You still need to supervise everything. You're still gonna have the people that eventually, gonna need to talk to somebody.
Yes.
That will be eventually erased, but it's gonna take some more time. And at the end, still somebody will need to supervise that. The AI will even give you discounts. But let's say more than that. If right now you're gonna go to the house and something doesn't work, so you go to the app and you're gonna write something, like, I don't know, the AC stopped working. Right. So the AI will automatically open a ticket for that, and they're gonna disperse people, and it's a whole part of the management.
Amazing. So then do you connect like a warranty service to that system, or does it already have a certain list of vendors that are integrated?
There are vendors who are integrated, but what do you mean by warranty?
I was thinking about, we use American Home Shield. So like in that.
No, we have our own people.
Part of that system. So when they say the air conditioner broke,
right,
we do pad split. And so with pad split, it's pretty simple. It's all about co-living, but it's very similar to booking.com and Airbnb, but it's a longer term renter. Right. Mm-hmm. So this renter is like a 3 to 6 month renter instead of just a short term renter. But we still have all of the same things that we needed with the short term. We still have the maid service. We still provide the furnished home. We have the maid service. She still comes, cleans once a week. We still have the platform of pad split. You still make a maintenance ticket. And then we still have our property managers that have to handle that. So we're actually scaling that. I was listening to what you were saying about 4 bedrooms and 5 bedrooms. And I was curious, was that model before you moved to luxury? Because I actually have a friend who's going to be coming on the podcast soon, and she does luxury co-living. So are you, when you were building the 4 and 5 bedroom homes, were you holding and doing co-living, or was it just for a single family or just for sale?
Yeah, no, it was for rentals.
For rental, long-term to one family.
No. When I was talking about it, I meant vacation rentals, but it's not co-living.
Okay, not co-living. Okay. And now you're doing luxury. Still luxury vacation rental with those at this stage.
So the main difference is that to do the luxury is that you're getting to areas that are not considered prime touristic areas. They're more like suburbs where the homes are kind of like cheaper, but you're offering a much better product. And the assumption was that people that come on vacation for 5-6 days, they don't have to stay at the beach. They're going to be okay with driving once or twice to the beach with the car for 30 minutes or 25 minutes, whichever. And the assumption was correct. Like anything else, it can be an hour's conversation about going deeper to it. I mean, for example, the only way it's going to work, you have to have minimum like 7 bedrooms in those homes. It's not going to work for less. I was literally yesterday, I went to a house that needs a complete gut job renovation, and we can only make it 5 bedrooms, and it will be beautiful, acre lot, beautiful, 3,500 square foot. The numbers just don't work for 5 bedrooms. So we have to do that. Now there is another issue that when you buy a house that is 5 bedrooms and usually you make it 7 without doing a complete gut renovation, the rooms are going to be, you're going to have like 4 rooms that are really nice. And then you're going to have like 3-4 more rooms that are much smaller, very minimal closet space. It's going to be great for vacation rental. But then when you want to sell it, you're going to have issues because people want to buy it for themselves. They don't need 7-8 bedrooms. They are okay with 5-6 bedrooms. They prefer the bigger rooms, the more closet space. So there's like it's a much deeper conversation to know if it's profitable or not, or on how to do it. Also, the cities now are making your life much, much harder with getting the license and the neighbors complaining. And so you need an area that you're like more isolated from neighbors. There is, it's a whole conversation about just how to do it right. But basically, today luxury homes are not what they used to be a year or 2 ago.
So you've spotlighted Tanzania, Zanzibar beaches to Serengeti safari lodges as high-yield frontiers delivering 20 to 30% returns to your investors. Beyond headline numbers like that, what truly excites you about these African markets? This is amazing.
Yes, so like we started the whole podcast, Life Takes You Places. 8 years ago, my best friend, we were best friends since we were 6 years old. He went to Zanzibar to propose to his current wife, and he just fell in love with the island. He had zero experience in real estate, which is another amazing story. He saw a land on the beach. He's like, I'm going to buy it. And he's very charismatic. He knows a lot of people. He's like, okay, I'm going to raise money. So he put some money down. He did not have a lot of money back then. And he went back home to Israel and he started talking to all the friends he knows and family and everybody. And he heard, no, everybody told him, are you crazy? Like Zanzibar. First of all, you don't know real estate. Second of all, you know Africa, like you don't know anything in Africa and stuff like. And he did not give up, and that's like the moral, because it was very easy for him to just lose the down payment he put on the land and said, okay, it's not for me. And I'm telling you, it was. I don't want to say he was close to it, but he ran out of options. And you know what he did at the end that pretty much brought him to where he is today? He saw there is a guy in Israel who is he has a lot of experience, 30 years in hospitality, in a very high ranking positions in hospitality. And he said, I want to pay you to be my mentor. And at the end of the meeting, because my friend is so charismatic, the guy told him, okay, I want to be your partner. I don't want to. So that pretty much brought to the first hotel, and it's a 5-star hotel, 86 rooms. It's a very known hotel in Zanzibar that also received the first place in the TripAdvisor for 5-star hotels. And then also when he started, he also talked to me and he's like, look, you have a lot of investors. Let's do it. I'm like, I gave him the same answer. I'm like, look, and that was years ago. We were really focusing here on the vacation rentals. I had a lot of things going on here. I didn't want to shift the investors that I know to Zanzibar.
Yes.
And I told him what most people will say, I need you to prove yourself, in a way. So he did. He did prove himself. And I went there and I really saw the potential and I've seen what he's done. And that's how I really got into it. Now I'm fully invested in Zanzibar. The potential is crazy. We're very strong relationship with the government, and we're just I feel that we're doing things right, and we have all the right connections, and we're very capable of. I did a soft opening to a hotel last week, and 45 rooms, also on the beach.
Congratulations.
Thank you. And this hotel, for the soft opening, 2 days prior, it was not ready.
2 days.
2 days prior. And, we brought 40 people to work 24 hours for 2 days to make it ready for the soft opening.
My goodness.
So it's kind of like the mindset of, you do whatever needed to make things work.
You know what? And you set your goal and you work your buns off to you set it, and there is no, okay, maybe I won't get up and do it today. No, look at what you put your money where your mouth is.
Yep. And I do put my money.
Yeah. And you put your money where your mouth is, you put your investors' capital to work as hard as you work. That is something that you don't find in everyone.
And you know what? Because you asked me about Zanzibar. I mean, for me, Zanzibar is very far away. I mean, I will prefer to do stuff that are close to me. I can go also to Guatemala, for example, that you could also make 17, 20% returns there. I know that from, personal people that I know. But first of all, I'm fine with exploring different markets, but you can't do all at once. I can't do Guatemala and Zanzibar at the same time. It's not going to work. So you have to choose one, and I choose where I already know that we have the connections. I know that I can trust the people on the ground, especially when you do stuff remotely. If you don't trust the people and you don't have the system right, it's not going to work. So that's why I'm there, and thank God.
And thank God. And that is exactly what investors often ask: how to get started in emerging markets, emerging market real estate without overexposure. And I think you just explained you have to have people on the ground. You told us about your friend who's been there for years and proved his point, and you had boots on the ground before you brought investors in. And so you know the market, and now you're talking Guatemala, you understand the market. So what are your top 3 action steps for someone entering Tanzania's hospitality sector today? Is it even possible?
Well, you mean if you want to start by yourself, let's say, from zero?
I mean, if you wanted to start by yourself, or, my whole thing is all about buying income. So, supporting an operator that's already there makes a lot of sense. Can someone get in touch with you directly?
Yeah, of course. So we have we have a lot of ongoing opportunities right now. We can buy a operating hotel. It's going to be lower returns, but it's a working hotel. You can also lease sometimes a hotel. Actually, you can do a few years lease, and you're going to have income from day one. Again, it's lower returns. If you want to have the higher returns, it's to buy land, to develop it. Zanzibar also have 5 years tax exempt for development, so that's crazy. You're talking about 30% savings just there on annual income.
You told me, that's amazing. I mean, you also told me something that blew my mind, because I would expect things overseas or even in these different parts of Africa to be less expensive. But you told me that ultra luxury Serengeti lodges command $1,000 to $2,000 per night. That's correct still?
Per person, not per room. Yes.
Per person. That's insanity. I mean, I don't think we have anything here that pays.
Well, it's a very unique product.
What can you pay for that's $1,000 a night per person here?
Well, you're probably gonna have some luxury rooms that cost like 2,000 a night. So it's if you come as a couple, maybe you have actually places in Zanzibar that can cost 1,500 a night, stuff like that. You have those as well. Not per person, but per room. But still, if there is a couple, it's like, 750, 800 a night. In the
Wow.
season, it can be higher. Yeah, I mean, you need to identify the product to look. If you're not gonna know people on the ground, it's crazy. We brought an investor once that we showed him around and to see the potential, and then he said, okay, I'll just do it myself. I'm gonna save hundreds of thousands of dollars to do it myself, which I understand the mindset, like to think that people are getting so many like commission cut and stuff like that. I'll do it
Right.
myself, and he lost the money because it's not like United States, right? So if you go here and you buy a house, let's say someone is presenting a deal to me and I'm trying to go behind his back,
Right.
I can probably do it because at the end, there is a deed on the property and I can go to a title company and they do the transaction. And if I can go around that person, it's going to work. Over there, you can't. There are a lot
I
of
have to stop you. It might work once, but then you have a horrible name.
Yeah. No, for sure. But I'm saying, like, if that's a person mindset, they can do it. In theory, they can do it. I'm not saying to do it. I'm definitely not suggesting anything here. But I'm saying in reality, they're not gonna get scammed from that deal. That's what I mean. And in Zanzibar, it's a different animal. And if you don't know the animal, you're gonna get bitten. That you can lose money. You don't know the process. It's not like a title company is managing everything for you the same way. It just knowledge is power, and knowledge worth money. So if someone is able to combine all the forces together to give you a product that works and save you all the headache, just do it. Don't think that you can do better when you have zero experience. That's kind of like what I mean.
Absolutely. And that's why you've built syndications and joined forces with private and family office investors across Florida and Africa.
Right, 100%.
So, from your syndication playbook, what pitfalls have you seen novices stumble over? I think you covered that already, but the way to mitigate that, I think you've already answered that, is just to go with a proven company, a proven group that is already out there, knows what they're doing. So now we're coming to the close of our podcast here in Change of and Triumph. And I think everything that we've discussed has been nothing but consistent change, market cycles, and triumphant finishes because you've had success in not one sector, not two sectors, but many sectors, Alon. It's very impressive.
Thank you.
So, pivoting from mid-range rentals to bespoke luxury homes demanded a bold mindset and new systems. When scaling into your high-end properties, and what pressure point nearly broke you?
Well, first of all, when we use investors' money and you present a new product, it's always scary because the most important thing is that the investors will be happy and want to continue doing business with you. You mentioned reputation. You don't want to ruin your reputation because if you do, that's it. There's no way back from that. You cannot say, "Oh, sorry," and everything will be okay. So when we're doing a big change in the approach for a business, we're always doing the first one or two with a lot of caution and protection. So basically, let's say the first home that we bought that was for like a luxury and stuff like that, we knew that we're buying it at a good price point, that worst case scenario, we can sell the house and still make a couple bucks. But we're not going to lose money with the idea that most likely the numbers will work. So obviously we do all the homework. We see all the prices that we think we can get there and the expenses, and we just, after we did the homework, we said, okay, it looks like a good investment, and worst case, we're going to sell the house and go back to what we know what we're doing, right? But it proved itself. Once it proved itself, we just start buying more and more in that segment in different areas. That's pretty much. But I think when you try to minimize all the risks, the fear kind of dissolve along the way. I mean, I can tell you that in Africa, I'm taking a lot of risks with my own money. And the risks that I'm taking is that I'm spreading money in different deals that hoping they're gonna come through, with the assumption that there is a small percentage, but there is a percentage that I can lose that money. Now it's not hundreds of thousands of dollars,
There's always a risk.
but I'm taking the risk, not the
Yeah.
investors. And that's why I feel that also I deserve the money, because if I take all the risks at the beginning and then I give a finished product that I know for sure is like not a scam and it's working properly and everything, and I have track record, like it's worth the basically the earnings that we're making at the end.
My goodness. So your pipeline blends Florida vacation homes with Tanzania safari lodges, blurring local and global strategies. Over the next 5 to 10 years, where do you see the biggest opportunity that others are overlooking?
Well, I can tell you now versus, my answer changes every once in a while because the market changes, right? So like right now for myself, I will say Tanzania, because that I'm there and I know that it's a proven product. I know that some people do Seychelles and they're making good money there. So for them, I can say also Seychelles. There are endless amount of opportunities out there. It's just for you what you feel is the best. And I want to pivot, like you keep saying, pivot. I want to make sure that I'm adjusting along the way to the best product that I can produce. So if let's say maybe the lens in Zanzibar beach will be scarce and it's going to be hard to find. So we're going to say, okay, what's next? Maybe we'll invest in Kenya. Now, I'm not saying I will invest in Kenya, but if opportunity will come in a few years and I know that we have it, I'm not going to say no to it. Now, I'm not going to say yes to it now because I have the stuff that I'm fully focused on. Like I said, I don't want to just do diversity endlessly, but I do want to be prepared. So I do know for sure, because you don't want to put all your eggs in one basket, So I do want to make sure that in a few years, there's going to be different markets to focus on.
And that's what the buy income strategy is all about. The book is all about finding ways to buy income and diversify your portfolio, because I learned from Ray Dalio. If you read the book Principles, he really spells out how from the 70s until now, he has really helped people diversify with the holy grail of investing. That's his terminology. And actually, Tony Robbins wrote a book, I think it's just this year, called The Holy Grail of Investing, that he got from Ray Dalio, because it's all about diversifying your portfolio. And I've heard that from you over and over throughout this podcast of how you did your fix and flips, you did your rentals, you did your property management, I don't even think you do fix and flips? You did fix, buy and hold.
I did a few.
Right. So you've done all of that, but now you're diversifying in geography and in niche. And that's what I hear. So you often advise reinvestors and late bloomers on seizing second act success. So what's your go forward blueprint for entrepreneurs or investors who feel they've fallen behind the curve?
It's pretty much what I said throughout the conversation, that first of all, if you're a person who starts, you need to have a person that already has the knowledge and did it himself, that they can help you, whether it's mentorship or kind of like your boss or something, someone that you can work with and you can learn all the tools. I wouldn't suggest to just jump into the water. For example, Zanzibar, I will never do it myself unless someone was already there, that he can kind of helped me in a way to start there. I wouldn't do it here. For example, if I want to do fix and flip, I'm going to make sure that, and I have zero experience, that my partner knows 100% about construction. You cannot just go ahead and say, okay, I'll do it. You can, but you're not going to do it properly. If you want to sell a house, you want to make sure that you know how to sell a house, or find someone who know how to sell homes. For me, that's the easiest way. Don't think you can do it yourself. And be open-minded to other perspectives, because it's very easy for a person who does something like a week, 2 weeks, a month, think that he knows so much, and there is so much more to learn, and people sometimes they get guarded.
I love, love, love that, because what I hear, what you're saying is that throw the ego in the garbage.
Pretty much.
Get a mentor. And so if you're behind the curveball, you're going to catch up a lot faster if you align with someone who's already doing it. And I think that's a great message for Change and Triumph's episode today. Thank you, Alon.
Awesome. Yeah, it's been a pleasure, and I'm happy we finally did it.